Hi, once again I'm back Kaushik Chatterjee. In this video, we are going to discuss a difference between SWP and FD. Most of the people already they have invested in both even this tool. Somebody has invested, let's say, in the fixed deposit, and somebody also invested, let's say, in the SWP, which just we have spoken even the last video. You can go and watch this SWP. Also, you can go and watch my FT video, and then you can come back and join this video so that it will give you a lot of clarity. First, you need to understand how it works, what exactly the fundamental difference if I invest in FD, if I invest in SWP, and then you can come and join this video and watch this video so that you will be able to understand the difference between a SWP and this FD. So let me tell you, each and every tool in financial investment depends on your need. Nothing is good, nothing is bad. It is all about how you want to use it, how you want to make profit out of it. It depends on the situation and depends on your circumstances. It depends again on exactly what parameters you are going to expect the return itself. That is the fundamental difference. So I'm not going to give a statement, this is good, this is bad. No. All your investment is good, all your investment is very, very good, all your investment is best because you have designed for yourself, you have designed for your profit, you have designed maybe for certain, let's say, for your commitment. So you have to be careful, and you have to first, you have to be convinced this is, for me it is better. I don't know, I would have been done something else, but this is actually works for me, right? So with this fundamental point of view, I'm just going to give you a simple difference. Even already somebody has invested or yet to be invested, or somebody is planning to invest, or maybe they have no idea about SWP or FD, how it works and how exactly I need to see the differentiation between all this financial tool. So you can watch this video and understand only in 3 points itself. So I'm not going to give you more points. Fundamentally, if you look out, there are only three differences. So, what is SWP? Systematic withdrawal plan, where you can invest a lump sum amount and you can get the withdraw based on the market risk. That is the point number one. Similarly, if I come back to FD, FD also works in a similar manner. Here again, you are going to invest a lump sum amount based on your capacity, based on your financial need, and again over a period of time you are going to get a fixed return. So that is the fundamental difference. The first point, in SWP you are not going to get a fixed return, the interest part I'm just talking. Whereas in FD, if you look out, whenever you are going to invest to any of the bank, any of the FD tool, so definitely you already aware that I'm going to expect 6%, 7%, 10%, 12%, 15%. It is fixed, maybe for 5 years, maybe for 10 years, what are the parameters I'm going to invest in the FD. This rate of interest, it is fixed on my capital. Whereas in SWP, it is not. Why? Because it is all market risk. Point number one. Point number two, very, very important. Coming to your risk factor. So in SWP, there will be a risk factor, yes, since it is all market related. So there is a risk factor in terms of your return, in terms of your rate of interest, in terms of your amount, what exactly you are going to expect to withdraw. That may be varied, it is not fixed. Maybe this year I got it 10%, next year I got it 9%, maybe another 2 3 years I'm going to get 5%, 7%, or maybe 20%. So this will be fluctuating. There is no fixed, there is no even difference how much I'm going to exactly fixed amount I'm going to get it. But here in my FD, I am going to get only on my capital amount only, fixed amount. Now here another thing, either my fixed deposit, it will be on the simple interest or it will be on the compound interest. Similarly for the SWP. SWP, it will be always working on your compound interest. Whatever you keep it, based on that one interest on your capital, it will be given another interest. But in FD, Maybe the rule may not be same for all even parameters, so that you have to check it out. And what is simple interest, what is compound interest, that also I've already even explained in my simple and compound interest video. You can just go watch and then you can come back to this video. So in simple I can tell you, simple interest on your capital, it will be given only interest. On compounding on your capital, whatever interest you are getting on that interest, again it will be added another interest, and that is called your compound interest. In simple note, I'm just telling over here itself, if you are not able to find out those videos. Now the third point is very very important. In SWP, both are taxable, both are taxable. Even my FD also it is taxable, even my SWP also it is taxable. But in my SWP, how it will be taxable? On my capital gain. So on my capital, whatever I'm gaining, I hope you understood what is capital. So whatever lump sum amount I have already invested, maybe 10 lakhs, maybe 1 CR, maybe 50 lakhs, whatever already I have invested, that is my capital. On that capital, whatever I'm gaining, based on my slab, based on my income slab, as per ATC, whatever slab even I'm talking. So again, ATC when I'm talking. So you can go, you can watch my taxation videos, series of videos already we have made, and they are already have discussed about the section 80C. So you can watch when somebody already working, somebody a serviceman, they will be very very happy to see those videos. So just go watch and then come back to this video. So on my capital, whatever I'm gaining, I have to pay on my income tax slab, I have to pay the tax over there in my SWP. Whereas in my FD, whatever interest I'm getting, capital again it is fixed, so interest whatever I'm going to get on that, again I have to give my tax, and I have to pay as per my income tax slab also. There will be also a TDS as per the government rule, right? So income tax, TDS, even your sales, the sales also it will be added to your FD. So that also it is there. So these are the things you have to understand. These are the parameters you have to understand. These are the only most even fundamental difference whenever you are going to invest, whether it is SWP or whether it is FD. Functionally same, but yes, fundamentally these are the three difference. It is your hard-earned money. It is your money. Before you invest, before you take a commitment, let's say for a longer time, 10 years, 20 years, 30 years, you have to understand the tool first. You have to understand the possibility of returns first, and then only you can choose wisely. So for that, I always suggest, whatever you are watching in this video, I am also sharing with my experience, with my even year experience over here. And also you can also take a help of your own financial planner, own your financial advisor. Even every companies, each and every even AMC companies, or it is bank, it is any financial institute, so they have all these educated, well dignified even people. Maybe somebody is your relationship manager, maybe somebody is your portfolio manager. So before you invest, I always suggest you also calculate, and you also take a suggestion with them, and then finally you take a decision. And definitely take a decision along with your family, because you're not going to enjoy this money, you're not going to lose this money. If you're going to enjoy this money, it will be for your family, and if you're going to lose your money, that effect also it will be badly to your family. Thanks for watching.